All right. So GDP is coming at 12:30. So it's in a few minutes' time. I'll just pause there to put a message into trading analysis to let you guys know because of the time change. Now, so a lower probability would be a complete unwind, right? Full unwind of this move, which I think if we stay below here, it's definitely possible. However, having swept that out and touched 72, depending on how the GDP comes, I wouldn't be surprised to see a spike up and then possibly a move down. But anyway, if this move is going to unwind aggressively, it's going to do so pretty much today. And if not, you'll see it hang around and hold in this area somewhere like this, and then either go for the highs again or drift lower and more of a consolidation pattern. So, big part of this is about the whole idea of being sidelined and front running and all that kind of shit that people were talking about, right? So people didn't want to buy 60, bit of fear, didn't want to buy on the way up, felt like it was an area top, didn't want to buy the top, didn't want to buy the first dip, it wasn't shallow enough. And then the market breaks out. But at this time, all the way along here, whenever you had all this bullishness, people are talking about, oh, are you sidelined, are you sidelined, are you sidelined, right? So the market was already FOMOing about being sidelined in this area here. And now it's pushed up again. So would there be shallow dips here is my question. My question would be, would there be a reason why Bitcoin will continue moving because people are still supposedly sidelined? Or has it reached essentially what is its top for now? Because it went further than people expected. That's always a sign. And it swept out everything up to here, right? So swept out up to there and has stayed below that level. Touched off those highs from the 8th of April. Didn't touch the all-time high itself. Grabbed the liquidity there and is currently reversing. Just on low time frames. But most people didn't really expect that. We only hit 70 yesterday, and they go, maybe we'll go to 71, maybe we'll go to 72, but then it kept going and going and going, and right up to the point where it's like, it's going to hit all-time high, and then it didn't. So in the short-term positioning, I think is likely to be offside. And if it starts to pull back, even just into a regular pullback and consolidation, how many will be calling this a double top? Right? The next fucking perma bear scenario. Because the bears aren't fucked. I mean, people talk about like, oh, the bears are all wrecked. They haven't even hit all-time high. And bear hopium is great fuel for bulls. So, again, not like the highest expectancy I have, but don't be surprised if there's a sharp drop, which gets, obviously, completely flips the vibes from, this is great, bullish, let's look at alts, back to, oh, we're fucked. Yeah? And when you have sharp moves up, sharp impulsive candles up, they can retrace just as quickly. And then it just goes back to consolidation. But if it dropped back, that'll be where people start pulling out the bearish ideas again. The bears say, it went just high enough as well. It went just high enough to invalidate bears' thesis. You know, most people I saw who were bearish were very bearish on price. They were very bearish because it hadn't broke 70. And then when it broke 70, I was seeing things like, yeah, but it's only a sweep so far. There's nothing, nothing major. And then whenever it broke above 71, it starts to get into like coping territory. But there's a lot of coins that have hit their highs. All right. Just paused for a second there as we were getting to the GDP. So the numbers are now out. Just checking in. Little down move on BTC. And the numbers, pending. Come on, let me know. Refresh. 2.8. So GDP has come in lower than expectation. So I mentioned this earlier. I think it was on Weekly Outlook on Sunday. Expectations 3, came in at 2.8. So it's missed expectation to the downside. But it's still showing a growing economy. So you will likely see the market react negatively to that in the short term, but it doesn't really matter. Then you've seen the non-farm employment. This is like the advanced one, I believe. Yeah, this comes like 2 days ahead of the main one, which is Friday. That has come in at 233, forecast 110. So showing a very strong jobs market. So overall economic data is pretty good there. No signs of recession, right? That would have to be negative to even flash a recession. And job market early indicator seems strong. So you would expect market to rise, right? Market would like that. Market would rally. But it's not. At least not initially. And the reason for that is because the market is already in a place where it probably should pull back. And that's why I'm just mentioning this possibility of a really deep pullback today. And it is not a bearish thing if it happens. It's just simply too much excitement, right side of the V, okay? There, that's your top. And this is all assuming. I'm not saying this is how it's going to go, but you know that, right? You have a large run up that pretty much most people miss. And then you have, where's the support? If it starts to drop through these levels, what's going to make people want to buy at 71.2? What's going to make them want to buy at 71? What's going to make them want to buy at 70? Now, you can definitely expect people to try and buy there, I would say. But don't be surprised if it unwinds, right? You see these unwinds that happen before major moves. I mean, it's quite common. I'll be able to find some here. If we look at before big moves, you can often see a full unwind or some kind of a, within a range consolidation. One example was here. That was much more at the lows. That was the grayscale news. So I would less so look at that. Even like here, right, when we were coming up, we went for a breakout attempt, fully retraced the previous day's move and continued higher after. And over here, right, the first time we come up to the all-time high, what happened? Pushed up, fully retraced the whole thing, back down, came up a second time. Over here, first breakout attempt fully failed and went back to support. And so on, and so on, and so on, and so on. Also here, right, this breakout attempt of all-time high in 2020. The next day, retraced the entire thing and had to consolidate more before the breakout. So just be mindful of stuff like this, where I remember this particularly being very hype at the time. Right, you see, I've got a different indicator on there. That's something for later. GM. Right. It's just a strong move up that most people miss, and then it reaches up towards the highs, and then people get themselves over allocated, and then whoosh, down it goes. And it's not bearish. It's just over allocation slightly too early into assets at probably bad prices in the short term. And where's the demand going to be? The demand really is 70. You could assume there should be some demand, and then of course all the way down. Again, doesn't mean it will go there. It's just be mindful of it, and I would not take it in a very bearish sense if it happens. It's just the whipsaw of emotions if we do. It's so over, we're so back, right? People think we're so back. Well, markets are funny things. Now, I don't think we'll break all-time high today. So obviously I've laid out there that path. This is not meant to be like a bearish fucking video. But looking at this, this is shading the Asia session. So from midnight to 8 a.m. UTC. Just ask ChatGPT to make me a simple indicator shading that in. Why? I want to show you visualization of why I don't think we're going to trend today, and I don't think stuff is going to pump. I think today is a pullback / consolidation day, like I mentioned last night. I was talking about it in the day trader chat and took a couple of trades. Monday, front running through Asia session, continues higher. Tuesday, front running through Asia session, continues higher. Wednesday, sideways. After a top where we hit the all-time high, or almost hit all-time high, and drop back, we then see a sideways, weaker, lower Asia session. So no attempt off the daily open, no real attempt to front run, no real attempt to get positioned for the day ahead. So it's a slight change in the intra-week behavior, just for this week. This week, the moves have been beginning through Asia and continuing into New York, and that has changed. There's been no Asia move. In fact, if anything, there's been net selling, which doesn't have to mean that everything's bearish and going to zero, but it would lean me towards probably not that we're going to see a strong breakout trending move. New York session comes in like an hour, so I wouldn't be surprised to see some sort of movements in both directions if the market isn't going to if the market is going to hold here, I should say. Wouldn't be surprised to see it move up towards the daily open, which hasn't been retested yet, and either we hold there and flip that and we go for the highs, or we consolidate down here and we probably go a bit lower down for more consolidation. That really is based on this daily range that we've set so far at the beginning of the day, right? So for the first 12 hours of the day, this is what we've been doing. For 12 hours, we've basically been consolidating in this tight range. It's trying to lose to the downside. If it doesn't reclaim, you can expect that it might drift lower. If it does reclaim and holds above, then you're looking at a move going into Thursday. So currently, the direction is telling you one thing, that it's at least attempting to sell off, and we'll see where that goes next. Same kind of thing applies across alts. Alts have been sideways since the open. They're mostly sideways and slight pullbacks. So this was a Doge trade from last night that I mentioned. And it was simple here. So when you see these moves happening, Doge came up to a previous liquidity level, which is from all the way back here. It was a daily high after the crash during the war fears. And it stopped respecting what it had been respecting before, which was the 50 EMA. So the 50 EMA on the 15 minute had been producing new highs and holding the trend. And then it hit the 50 EMA here. It did not make a new high. Then it came back and tested again, and it kept testing and testing. You see, then it fails and it drops lower. It went down to liquidity. That's about it, though. I don't think, barring a full reversal day, which I think is, again, unlikely, like I mentioned with Bitcoin, barring that, I think that the most likely thing we're going to see here is actually just a very choppy, grinding sort of consolidation day where you don't really see large sell-offs, and you see probably like false rallies that go to one lower and then it just sort of chops around, or you see some rallies up into gaps and then it just chops around. It's very much setting up like it should be a consolidation day. And consolidation day would be after having had quite big moves, the market just is going to stop and digest. It's going to stop and it's going to hold. And it's going to essentially allow everything to catch up, right? So if you just take Doge, for example, Doge has been, let's say, in a 1 hour trend, right? This entire move from Sunday has been above the 1 hour EMAs. And it has held the 1 hour 1221. It is now breaking that. It's not respecting the 1221 anymore. So when it stops respecting what it was respecting before, you expect something else to happen. Typically, that means the Doge's fast trend on the 1 hour is now finished. And so whether it goes up or down or sideways, the expectation is that it does not go to new highs. If it does, you'd expect it to reject them. And so it could go a lot more down, but more likely is that it spends some time now letting that trend catch up, much like it did over here when the consolidation happens after the fast trend ends. This is typically where you do see bounces, right? There's a very good reason why you would see bounces here. So it took out some liquidity, and Doge will bounce up like this because then people who aren't aware that this trend is weakening will pile into longs, and it will just drift back and go to new lows, and it will chop, chop, chop. And then the trend will begin at some other point, yeah? So I think that those fast trends, at least you can see this throughout the market. Where are the fast trends developing? Where are they strong? Where are they not? What the fuck's going on here? Trading views being super slow. Bitcoin is, toying with losing its own fast trend. And this is something that I strongly recommend that you go and test. What happens when? What happens when Bitcoin or any coin loses its fast trend, which is the bands, the green bands, 1221? When it loses it, and define losing it. It can be when it crosses red. For me, it's when you see it closing, whenever candles are closing below, after having respected the trend before, and the candles start to close below it. That's an early sign that it's losing, because this is not meant to be a signal to short. This is a sign of, is the market going to stop trending and go into a sideways consolidation, right? And so when you see these fast trends, like we have over here, it goes up, it respects it, respects it, respects it, respects it, respects it. And even here, when it starts to close below it, well, maybe not, it's not as fast enough. It's not a strong enough trend. Here we go. Strong trend, strong trend, strong trend, strong trend. As soon as it disrespects it, what happens? It doesn't go to zero, but it goes sideways for quite a while. If you're someone who finds you get caught in chop, this is something you need to be looking at, right? You're saying, well, how do I know when the market's going to stop trending? When it stops respecting whichever trend it's in. And this doesn't mean you have to trade any specific way. It's actually really good to just use this as an indication of maybe when not to trade, or when to expect certain things, right? So take this, for example. You might look at this and say, oh, well, this doesn't really make sense. It goes green and red. It's not respecting the 1 hour trend here. That's not a 1 hour trend because it's not hitting it. So you go to a lower time frame and you see which trend is it respecting. Is it 15-minute? Yeah, right? It's respecting the 15-minute trend. What happens when it stops respecting the 15-minute trend on that time frame? That's when the trend finishes and it goes into a lengthy period of chop. This generally takes you throughout a day, right? That's all of Wednesday's move and then into the highs. And then what happens on Thursday? And this is really how you need to view trading from a perspective across days. And this is more for day traders, but this also is true for anyone, because like yesterday, whether you're a day trader or not, yesterday probably got you super hyped. Yeah? So you're probably looking at today and you're like, is today going to be the next big one? The reason why I'm saying no is because of these type of things. It's not because I'm bearish. It's because let's assume that Wednesday was just like yesterday, Tuesday. Now we're into Thursday. What happens Thursday? The fast trend stops getting respected, right? When it stops holding the 1221 bands and it starts having to dip lower for liquidity. It comes up, it tries to break out, fails. This is all Thursday. Then what happens? It drops off. People are like, oh my God, it's super bearish. No, it's not. It just has to go back to the lower end bands to catch up. And then it moves up. Is it trending? No. Breakout, fails. It's in consolidation. This is all consolidation. It just happens to be sloping upwards, right? It's upward sloping, but it's still consolidation, not trend. So if you go back to the current time, where we're at right now, it's clear as day. Bitcoin respected its 50 EMA on the 15-minute. I mentioned this last night. I talked about it in trading analysis. It's been respecting this. So when you hear me talk about stuff respecting, a little peek of masterclass chat there. Oh well. No secret alpha. Here, right? So, mentioned it here last night. The 15-minute bands have been respected all the way in this trend. So unless they're reclaimed, it's likely to drop back and chop. That was here. At this point, even though it was pulling back, Bitcoin was respecting the 15-minute bands and respecting the 50 EMA. So the bands wouldn't go red and the EMA would stay and hold. Yeah? And I said, as long as that continues, you might see that path. If not, you'll see something like the red path. Paths don't really matter that much. You're looking here, it did actually respect the 50. So at that point, that's when I said, basically, if it goes anywhere lower than these bands, that's done. Because it's like the last possible chance it could have to maintain that trend. Otherwise, it's going to drop into a slower trend. And that's why these paths were drawn here, right? And so back to what we have seen, we've seen the second part. See us here? Right, over at this point here. It failed. It failed. It is then chopped sideways. Chopped sideways. I thought it might drop back faster. It doesn't matter. It's the same end result. The end result is Bitcoin is not respecting the 1221 bands and the 50 EMA on the 15 minute. Therefore, you should expect, like what I showed with that example from a few Wednesdays ago, or maybe it was back in May, I don't know. You should expect that Bitcoin will now go into some form of a consolidation. That does not mean it's going to go to zero, although I have already laid out for you how there could be a fast unwind if key levels break. But let's say that it just drops down to here, right? And then everyone gets themselves super bearish. What does it do? It comes all the way back up, and people get super bullish again, and then it's not time to trend because it's building itself into something else. It's consolidation. It's digesting the move that's just happened. Yeah? So, anyway, I think that's enough on that. You should understand now how trend, exhaustion, and consolidation and all that works. No. It's 20 minutes already, 25 minutes. Fuck. It's going to be a long one. Could the ETFs mark the top? Let's see. There's been a lot of talk, and I've been the main one saying it in our campus, about how Bitcoin ETF flows tend to come near the tops in these moves, right? The high flows correlate with local tops in this summer range, right? And so when you zoom out, you look at all this, and you look at July, you look at June, you look at May, you look at April, and you even look at September and August. All of those correlate with a rapid increase of ETF inflows. Then, in the 11th to the 16th of October, we saw the same thing, right? So in here, this period here, we saw high flows, and then we had a little drop back, but then we pushed beyond. So does that mean that's invalidated? Just because there was low flows to high flows and then it went higher? Does that mean that now suddenly the ETFs are right? Not necessarily. Because then what we've seen, and it's all about rate of change. It's not about how much, oh, there's 400 million, therefore it has to be bearish. It's, think of it in terms of volume itself and FOMO. So on the 24th, 25th, 28th, 200 million, 400 million, 400 million, pretty much what it has been doing. 500s and 300s and 400s is normal for this rally. Then, yesterday, as we tried to hit all-time high, 870 million. That's double of anything we've seen, right? Almost double. That is the type of move that can produce a local top. And I'm very clear about this. Local top does not mean the top's in. But I wouldn't be surprised after that the markets have grinded up just far enough for the fucking ETFs to FOMO in massively. And the ETF FOMO is a real thing. Now, ETF FOMO can be a bullish thing, like we had back in February, right? Where we had essentially big FOMO on the ETFs and the market kept going higher. February, as it was pushing, 400, 500, 400, 600, 300, right? This part here from the 8th of Feb all the way through to the 14th, or through to the 16th, really. The 8th of Feb through the 16th was all along here, right? 8th, 9th, 10th, 11th, 12th, 13th, 14th, 15th, 16th. All of this was high ETF flows, FOMO driven, pushing hard. But what happened? It pushed through the local high at 49 and held above it. So what you'd want to see for the ETFs, I would say, is over the next week, that the high flows continue and the price pushes through and holds. What you need to really see is evidence of the ETFs after this. So what are they going to do today if we pull back? Are they going to dump? Are they going to panic? Or are they bullish? Are they going to keep buying? Because if you were willing to buy 900 million yesterday at 70 fucking 3, then surely you should be willing to keep buying today at 72. Isn't it a great fucking deal? That's what they were doing in February. No price was too high in February. That's the behavior of it. Because there was such an expectation of future price appreciation and that the market was well balanced for it, buying hundreds of millions at 44 didn't stop them buying again at 47 and at 48 and 50 and 52. Yeah. So is that going to continue? It's the trend of behavior. They are happily buying at 62 and 4 and 6 and 8 and even 70 and even 72. So they've shown all the way that they're happy buying. Is that going to continue? That's what matters. So keep an eye on it. No. What else? It's going to be a long one. This is something that I want to expand more on in a monthly preview, which I'll probably do on the monthly preview for November. But the last thing I want to talk about is Bitcoin, because I see a lot of parallels to this now with the ETFs and with right now. So let me just knock some of these off and zoom it out. Viewing this from a cycle basis, and I will cover this more on the monthly preview. If you follow in the 4-year cycle, going into the Bitcoin ETFs, we had a much earlier narrative, meaning we were going much higher, much sooner than would be typical for a Bitcoin bull market. So the ETFs launched in January 2024, and we were about halfway back to all-time high. The equivalent would be January 2020. In January 2020, this is where we were. Nowhere near. We were actually in a decline, coming down off the highs. And not like a massive disparity, but quite clearly from January 2020 to January 2024, the market was in a much stronger bullish uptrend because of the expectation of the ETFs and the changing market dynamics. What I'm trying to visualize for you here is look at the slope of this. Look how aggressively this bull market has trended compared to this one. Right? The last 2017 bull ended and we went into a deep, long bear, followed by a rally off the lows and then a full pullback and then COVID and then a reset. But it actually gave a really nice structure to the bottom, to a base, where you had your first rally, it retraced it, you had your base form, and then you had a nice impulsive parabolic move off it. This has been a lot more aggressive. It's like we collapsed so fast, we barely hung around at the bottom, and then we just rallied straight off it. This 2023 is like where people were saying, oh, it's going to go all the way back to the lows. It never did. It kicked on here in October because of ETFs. That's why I think that there is probably cause for the market to slow a bit as we go towards the end of the year. But the elections are pulling it forward. So I think that this is all very good. It's all very bullish. Bitcoin is in great shape. But we never hit all-time high before the halving. Okay, so halving was in April this year. And we hit all-time high in March. If you're going by 4-year cycle, March 2020, right? March 2020, we were here. So that's where we were 4 years ago. This time we were at all-time high. Last cycle, we didn't hit all-time high before December. So the end of the halving year, which would be like December of this year. That's why when we had the whole summer pullback, and you hear people saying this is normal, we were ahead of schedule anyway, it needs to digest it. Completely true, right? This 7 or 8 months is essentially just replacing what we had from March to December of 2020. March to December of 2020, we sort of grinded off the lows. This time we had to consolidate because we'd hit all-time high already. The market was moving way ahead of schedule. Yeah. So, in looking at that, now, typically, in the past, we would have broken out in December, gone into January, and that's happened a couple of markets. But let's just take last cycle, the 4-year cycle, because if the 4-year cycle is still holding, we expect it to hold until it doesn't hold anymore. We're now right on the doorstep of all-time high in October, going into November. I think the reason for that is the election. They're just the same way the ETFs kind of pulled us forward too fast because there was a lot of hype and bullishness. I think the election and the Trump trade is having a similar effect in that it's pulling forward the bullish move towards all-time high. And that's why if we do hit it like now around the election point and it breaks out or has an attempt to break out, I might be expecting a similar thing where we could be a couple of months ahead of schedule and the market then has to digest that, cool off, chop or whatever. So these genuinely very bullish events are potentially pulling the cycle forward, and consolidation after them is actually the best thing that can happen. Because if you remember back in March, what was everyone talking about? This left translated cycle, which is just a way of saying a shorter cycle. People talk about shorter cycle. It's going to go all the way to 150k really quickly, but then it's over. It's going to be done by Q2 of 2024. You don't hear people talking about that now because the market stopped and it digested that move. Very bullish. So the elections, I should say, if they're pulling forward some of the Bitcoin price appreciation because it's a bullish trade on Trump, if it breaks out and continues, that would actually be a sign that there's probably going to be a shorter cycle in terms of to the next local top. If the election provides a local top and we chop around until December or November, December, whatever, that's actually a sign that we're on track for a regular schedule of a cycle, which would be much more bullish in terms of time that we would have, going into 2025. So that's what I'm looking at. I'll dive more into it on monthly preview, but that's a long enough daily levels, GM. Thank you all for watching. See you later. 2 streams, Ask Michael, and Trade of the Day, GM.